It's a once-in-a-generation build-out on infrastructure. The convergence is very important. We're seeing AI now being adopted in digital entertainment, in social media, by the cloud guys. So it really is a global phenomenon. And interestingly enough, just the developing countries are able to leapfrog a lot of the technologies.
All right, welcome back inside our proactive newsroom. And joining me now is Anthony Ginsberg. He is the CEO of GinsGlobal Index Fund. And Anthony, good to see you again. How are you?
Great to be with you, Steve.
Yeah, so take a look. It's been a while since you and I had a chance to chat. So checking in on the Tech Megatrend Fund, and right now you're showing that the fund is at an all-time high. So obviously things are going well right now.
Yes, although our price to earnings ratios aren't that excessive. So yes, we're up 27% year to date. We are at a new all-time high. Since the March lows, we've actually had a very, very strong double-digit growth, both in April and in May. We've seen some nice inflows as well. But because we're equally weighted, Steve, you'll recall we have these 10 sub-themes across everything from AI, robotics, cybersecurity, cloud, social media, etc. Those PEs, when you delve deeper beyond the mega caps and the Mag 7, those PEs haven't run as much. So actually our overall PE ratio is still in the low 20s, unlike something like perhaps the NASDAQ, which is in the mid 30s and is dominated by obviously the Mag 7. We're a lot more spread out. We have 140 holdings globally. Actually, what's really helped us a lot has been the emerging tech, not just in the US, but in places like South Korea with Sky Hynix. You've also got Japan, China. They've all, South Korea's at an all-time high with their market. So that's certainly helped us. And the weaker US dollar, Steve, by the way, also helps boost earnings. So we've seen earnings growth here in the US of about 20% year on year in the tech space. And some of that is due to the weaker dollar, in fact.
Yeah, and that global story is a big one for you, right? That sort of differentiates you from a lot of others.
Yeah, absolutely. We're actually delving deeper into sort of the second tier of tech. So things like gene editing or I'd say quantum computing, which we added some time ago, as well as defense tech. You just don't get that overlap in some of the other tech holdings. So our Mag 7 weighting is actually below 10%. Even our top 10 holdings only make up about 11%, Steve. So we're using the equally weighted approach. It certainly helped us, and it's a lot broader. We see a lot more correlation and convergence across tech. We're seeing more M&A activity here. Obviously, since President Trump came in, it's more business friendly. So the antitrust blockages we saw under the previous administration are gone. So more and more M&A in areas such as cloud, cybersecurity, digital entertainment. So that's also boosting the second tier players. You may recall we actually have 15 leaders for each of these 10 sub-themes. But I will just say defense tech and quantum have been some of our standouts in the last couple of months.
AI is obviously a topic that you cover quite extensively, and people are talking about it as well. And there's some IPOs around AI as well. It's not going anywhere. It's only increasing.
Yes, and it may even be going into space with SpaceX's obviously IPO, but Anthropic and OpenAI. It all helps the ecosystem build out and to raise capital. There is a once in a generation, Steve, build out here. Obviously under the current administration, there are these big tax incentives for capex expenditure, and you see a lot of data center build outs. Places like Arizona are becoming increasingly data center driven. Good news is, unlike the internet bubble of 20 some years ago, for those of us with a bit of gray hair, these are tech firms are very, very cash flush. They all working largely off subscription monthly basis. We didn't see that 25 years ago, where the guys didn't have the cash. They didn't have strong balance sheets, and many of them were spending a ton of money on advertising at the Super Bowl and elsewhere. So it's very different to it. It's some of us in our early career, because the health of these companies, honestly, the balance sheets are incredibly strong. And the build out, interestingly enough, a lot of the data centers in AI have been pre-leased. So something like 80% to 85% are actually already sold in terms of the space. So we're quite positive. But I would say one last thing, the cloud computing area has actually been growing even faster than AI. So you see these hyperscalers, Amazon Web Services, the likes of Microsoft, also being very, very strong in their annual growth. Google, quickly on the cloud side, Google had the fastest growth, around 63% year-on-year earnings. So very impressive.
Yeah, and just lastly, does it tend to slow down as we head into the summer, or does it stay pretty standard, or at 12 months a year?
Well, because we've had such a strong run up in April and May, there may be a slight breather, but based on the valuations, and the shortage of memory chips. You obviously have seen a big run up in some of the memory
Yeah.
chip players like Micron and SK Hynix and others. Those guys aren't even playing on a price to earnings ratio of 20. They're actually below 20 times. So a number of the second tier players beyond the Mag 7 are actually not overpriced. In our view, this continues. And again, it's a once in a generation build out on infrastructure. The convergence is very important. We're seeing AI now being adopted in digital entertainment, in social media, by the cloud guys. So it really is a global phenomenon. And interestingly enough, just the developing countries are able to leapfrog a lot of the technology. So we're seeing places like Asia, Latin America, even Africa, adopting cloud and AI even at a faster pace than in the US in certain cases.
Wow. I love chatting with you about this very exciting stuff. We'll continue to monitor it as it continues to develop over the months to come. So, Anthony, thanks so much. Good to see you again.
Take care, Steve.
All right, you as well. Anthony Ginsberg, CEO of GinsGlobal Index Fund.